Imagine a company, right? And they proudly say their goal is building one of the world's great companies, okay? Now, picture that same company facing just a brutal year, record-breaking global catastrophes. We're talking hurricanes, wildfires, earthquakes, off the charts financially. And somehow, in that exact same year, they pull off their biggest acquisitions ever and get exceptional financial returns. I mean, how does a business not just, survive that kind of year, but actually call it transformational? It sounds almost impossible, doesn't it? Today, we're doing a deep dive into the 2017 annual report from Markel. They're a company that measures greatness not just by profit, but by how they serve their customers, their own people associates, they call them, and shareholders. Our mission here is to pull out the key lessons from how they told their story that year, really focus on how they balanced this super steady strategy with being incredibly adaptable. It was such a pivotal year for them. So why should you care about this? Well, look, whether you're navigating your own career stuff, maybe scaling a business, or you're just curious how huge organizations handle massive risk and still chase growth, Marco's story has some really valuable insights. How do you prepare for the worst case scenario and still push for your biggest goals? Let's unpack this. Okay, so let's start with the basics. What really jumps out is how Markel defines success for itself. It's not just numbers. They talk about serving this beautiful tapestry of customers, associates, shareholders. It sounds like a core belief. What does that actually look like day to day?
That's such a key question because it really gets to the heart of it. What does success look like beyond just the financial bottom line?
For Merkel, it seems to be about consistency, dependable service, dependable growth, but across all those dimensions you mentioned. And if you connect this to their strategy, their core approach, diversification and specialization, well, that hasn't changed since 1986, since their
Also,
IPO.
since '86, that's some staying power.
Exactly. And they use this phrase, which I think is great, about helping customers put Humpty Dumpty back together when things fall apart.
Hmm.
And that's not just insurance, right? It's across this really diverse group of businesses. They own industrial equipment, information services, even housing and healthcare. They're providing fundamental support.
Putting Humpty Dumpty back together. I like that. It captures that idea of trust, of being there when things go wrong, and it feels like that extends inside the company too. They talk a lot about their Markel style, about being a Markel family. Sounds nice, but, is it just corporate speak? Or does it actually impact how they operate and grow? Oh, it absolutely seems to be core to how they pick their people and how they think about personal growth within the company. The Markel style, as they call it, boils down to these unchanging values. Integrity, always improving, and being really committed to the long haul. They're pretty clear it's not for everyone, this culture. But it attracts people who really buy into that.
Yeah.
People looking for a better way to do things. There's no room for just getting comfortable.
No complacency.
Right. And what's really amazing is how that's fueled their growth. You look back at 1997, they had, 830 associates?
Okay.
By 2017, that number was over 15,000.
15,000, that's huge.
It is. And it shows how they actively create paths for people to learn, to grow, take on bigger challenges. It becomes this virtuous cycle, they call it. Strong culture helps serve customers better, which leads to good financial results.
That growth is pretty staggering. But okay, here's where the story gets really intense. 2017 wasn't just like a difficult year. It literally broke financial records for insured catastrophes around the world. We're talking Hurricane Harvey, Irma, Maria, the terrible California wildfires, the earthquakes in Mexico. The list just goes on. So how did this company, built on this Markel style and long-term view, handle that kind of just immense pressure and those record-breaking losses?
Well, this really hits on one of the biggest questions in business, right?
Yeah.
How do you manage risk when the absolute unthinkable happens, and on such a massive scale? The total industry losses from all those events were projected to be over $135 billion.
Billion. Wow.
Yeah. Now, for Markel specifically, they paid out $159 million in claims related to those events, but their total expected losses were pegged at $565 million.
Okay, so a big hit.
A very big hit, and it directly impacted their combined ratio. It went up to 105%. Now, for anyone less familiar, a combined ratio over 100% basically means for every dollar you bring in from premiums, you're paying out more than a dollar in claims and expenses.
Right. So 105%, that's losing money on the underwriting side.
Exactly. And those catastrophes alone added 13 points to that ratio, so you could see the direct impact.
Okay, 105%. That is a serious blow. They're paying out more than they're taking in on the insurance side. How do they absorb that kind of shock without it, crippling them?
This is where their management approach really shines through. They talk about being conservative, prudent, and interestingly, they frame these huge payouts not really as a loss in the typical sense, but as fulfilling their fundamental promise to customers. It's literally that putting Humpty Dumpty back together idea in action.
Fulfilling the promise.
But it's not just about paying claims. They're quite explicit about rigorously learning from these massive events. They constantly iterate, adjust how they select risks, how they accept risk, and crucially, how they price those risks more accurately going forward.
So they learn and adapt.
Precisely. And another huge factor is their geographic spread. Their exposures are deliberately dispersed. Think of it like, not having all your investments in one stock.
Diversification.
Exactly. It means a hurricane in Florida doesn't necessarily impact their business in, say, Europe or Asia Pacific in the same way. That spread creates efficiency and lets them offer protection potentially at a lower cost than someone concentrated in just one region.
Okay, so they pay the claims, they learn, they adapt pricing and risk selection, and they benefit from being spread out geographically. Makes sense. But here's the real twist for me. In the middle of all this unprecedented global chaos and paying out massive claims, they weren't just holding on for dear life. They were actively expanding, making their largest acquisitions ever, you said. How do you even manage that, dealing with disaster with one hand and pursuing huge growth with the other?
That's exactly it. And I think that really showcases their long-term vision, right? It shows how they pick their opportunities and manage to balance that growth ambition with underlying stability, even in a crisis. So yeah, in 2017, they bought 3 pretty substantial businesses, 2 for the insurance side, SureTech and State National, and 1 for Markel Ventures, which is their non-insurance arm called Costa Farms.
Okay, let's break those down. SureTech.
SureTech brought deep expertise in the surety market. That's basically guaranteeing contracts or obligations will be fulfilled. It's a specialized area of insurance. And it was one Markel hadn't really been a major player in before. What's interesting here is the founder of SureTech, John Knox, actually went to Markel.
He approached them.
Yeah. He saw Markel as the best home for his company's future growth and, importantly, continuity. He knew Markel had this national distribution network that SureTech could leverage.
So it was a strategic fit, not just a financial transaction. What about State National? That sounds more like traditional insurance.
Yes and no. State National is an expert fronting company. That means they essentially allow other insurance companies, maybe ones that aren't licensed in all states or don't have the top financial ratings, to issue policies using State National's paper, basically.
Ah, okay, so they kind of lend their credentials.
Sort of. They also provide collateral protection products. But here's a really critical piece. They help emerging fintech players in the insurance space. Think of tech startups with maybe great marketing ideas or new ways to reach customers, but they don't have the licenses or the required financial strength ratings to operate legally.
Right, the regulatory hurdles are huge in insurance.
Exactly. So State National bridges that gap. It lets Markel effectively partner with these innovators, lets them operate under the Markel umbrella, and crucially, it gives Markel a front row seat to see how technology is really changing the insurance landscape. They get insights.
That's clever, learning from the disruptors by enabling them. Okay, and then Costa Farms, insuring things, fronting services, and the world's biggest grower of houseplants? That seems like quite a leap. How does that fit?
It does sound a bit random at first glance, doesn't it? But it actually lines up perfectly with the Markel Ventures philosophy. Costa Farms became the largest acquisition for Markel Ventures up to that point. It's a third-generation family business. And their focus. They explicitly talk about customers, culture, and growth. That aligns almost perfectly with Markel's own long-term sort of generational view of building businesses.
Ah, so the values aligned, even if the industry was different.
Precisely. It fits the diversification and specialization strategy. They added this robust, stable, growing business that operates completely differently from their insurance side. It balances the portfolio.
Okay, so buying 3 big companies, paying out record claims, that takes some serious financial firepower. What's the secret there? How did they maintain that kind of fiscal strength, especially facing pressure from both massive growth costs and those huge catastrophe losses?
Yeah, it really makes you ask, how do they manage their capital so well? How do they balance that risk and reward? Well, first off, they paid for all 3 of those acquisitions entirely with cash.
No new stock issued.
No dilutive equity. They just used cash on hand. Doing that, while also handling those record claim payments we talked about, is a pretty powerful demonstration of their underlying financial strengths, their investment skill, and just conservative financial practices over time.
Definitely builds confidence.
And they also showed they could access capital markets smartly when needed. They raised $300 million in 30-year debt. Fixed rate. At a pretty good rate back then, 4.30%. They did that in the fourth quarter. Shows they can get financing without stressing the balance sheet.
Paying cash for huge deals, raising long-term debt at a good rate. Very solid financial management. But what about their actual investments? How did their portfolio do in such a wild year?
Ah, okay. This part is really fascinating. In 2017, a year with all that turbulence, their publicly traded stock portfolio returned 26%.
26% in that
Uh,
market.
yep. And their fixed income returned 3%. So the total investment portfolio was up 10% overall, which added over $1 billion in gains.
$1 billion in gains on top of everything else.
Well, they talk about what they call a triple play advantage. First, ultra-low costs. They manage their investments very efficiently, sometimes even lower cost than passive index funds. Second, tax efficiency. They manage things in a way that minimizes the tax drag on returns. And third, what they call rigorous intellectual engagement, just constant deep thinking about the businesses they own.
And their actual approach to picking investments.
It's remarkably consistent. They have this four-step approach, unchanged, again, since their 1986 IPO. Focus on profitable businesses you understand, make sure they have talented management with integrity, look for companies that can reinvest their earnings at high rates of return, and then crucially only buy them at reasonable prices for the long term.
Sounds simple, but clearly effective.
Very. And one more kicker for 2017. They got a big boost from the U.S. tax law change that year. Remember when the corporate rate dropped from 35% down to 21%?
Oh, right. It was huge for many companies.
Huge. For Markel, it added about $402 million directly to shareholders' equity, just like that. A significant one-time benefit on top of everything else.
So they're not just resilient, they're incredibly financially savvy and maybe even a bit opportunistic when conditions allow. It really does sound like a company that's just constantly asking itself, how do we get better? That relentless improvement seems baked in even during a year packed with massive challenges and huge growth initiatives.
Absolutely. That mindset seems key. And you see tangible evidence, too, like their expense ratio, basically how much it costs them to run the insurance side relative to premiums, actually improved. It went from 39% down to 37%. That shows they're getting more efficient internally, even while growing.
Little improvements add up.
They do. And they stated very directly in the report something like, there are no activities within the Markel organization that are not being actively worked on to be made better.
So?
Pretty strong statement, right? It emphasizes this commitment to continuous improvement that they try to instill in everyone in all their operations.
Wow. No complacency allowed.
Seems like it. And they use technology quite a bit, streamlining, renewals, accounting, claims processing, making marketing more effective. It's not just about culture. It's about operational excellence, too. The report itself, it doesn't just end with a summary. The final word is just next T.
Next T.
Yeah, which really embodies that whole philosophy, doesn't it? Constant evolution, always looking ahead, but guided by that core Markel-style hard work, aiming for excellence, having a sense of humor, honesty, fairness. It's that drive for finding a better way to do things.
So when we wrap this all up, what we've really seen in this Markel 2017 deep dive is a company that, well, it walks the talk. It lives its principles, especially under extreme pressure. They faced truly unprecedented external hits with those record catastrophes. But because of their conservative management, their really strong financial position, and just this unwavering commitment to that core strategy, diversification, and specialization, they managed to make huge acquisitions, get incredible investment returns, and actually come out stronger. It's just such a powerful example that having a strong culture, having a clear vision, it's not just fluff, it's not just nice words on a page. It really is the foundation for long-term success, especially through tough times. So maybe here's a final thought for you, listening. In a world that feels like it's changing faster than ever, full of surprises, Markel's story really highlights how critical it is to have some kind of style, right? A set of core principles that don't waver. So we invite you to think about, what's the unwavering style? Or what are the foundational principles that are essential for your goals, whether that's personal or professional? What do you need to not just get through disruption, but to actually build something genuinely great that lasts for the long haul?